You're watching today's video technical update presented by FX Times. It is Thursday, March 18th, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex market. Today we'll take a look at the bearish indications from the euro dollar. We'll also take a look at the strength displayed by the Aussie dollar and wrap up with a look at possible bearish indications for the pound yen pair. This video is being produced at about 2:40 p.m. Eastern Time, approaching the end of the US session. Here's a look at the euro dollar with a daily chart. First, want to note that the current rally that's seemed to be breaking this rounded bottom has failed to sustain itself and failed to go above 1.3850, which would have given us implications of a further rally towards 1.4150, 1.42. So the market at the moment is bearish and fails to break above our 50 moving average as well as declining trend line. Now I want to show two ways of drawing your trend lines here. One way, you take your extreme highs and you connect them. That gives us this trend line. Another way, for a top like this, you want to take the older top, the first top, instead of this second exhaustion top, then connect your trend line that way. And with that trend line, you see that the market has not broken this declining trend. And the price action here also shows bearish, is a bearish signal, with the stochastic showing that the momentum is turning. Actually, before going to the overbought zone, it's already crossing. Looking at the weekly, if the market continues to decline, it could come down to the 1.3050 and even the 1.30 area. Here is a rising trend line here. So the market in the long run, in long terms, appears to be in a congestion mode. Again, you see this type of top, you might want to draw your trend line this way. Now here, right, so further decline eyes the 130.50, 130 area. Looking at back at the daily, actually looking at the 4-hour time frame, we see that the signal is in place. We have a break of our rising trend line. However, in this short term, it has not confirmed the decline. Where we are is we have a signal, and what we want to see is a pullback that may test this 1.3650 area, even a retracement area up here, for example your 50 or 61.8% area, and then another decline should give you confirmation for the bearish outlook. However, just to be conservative, your decline, you may want to wait until this breaks as well. We may have some further consolidation before that the bearish swing starts towards our 1.3050, 1.30 area. So right now there's this bearish indication. Look for some confirmation. However, in the intermediate term, short intermediate term, the bearish outlook goes to 134.50. With a possibility of breaking and then further decline towards 1.3050, 1.30. And here's a last look at the euro dollar with the 1-hour time frame. You see that there is a bullish divergence. So there's also a reversal combination here. So we might have some bullish attempt here at 1.36 in the near term. We'll see if this rally continues in the Asian session and the European session. If it doesn't, then looking back at the 4-hour time frame, we may have a continuation decline towards 134.50 in the short intermediate term. We took a look at the Aussie dollar earlier this week, and as it approached the 0.92 area, right now it broke it, but is basically testing whether the market will continue or or it was just a clear out action. Looking at the 4-hour time frame here, you see the break and right now in an attempt to come back and have a throwback, you see a throwback could go all the way down here to 90, 50 area and still be in the context of a uptrend. So looking at the 1 hour time frame now, just for an even closer look, we see that this is the current decline. As I mentioned, it could go down to the 0.9150, 0.9160 area in this declining channel, and then it should rally if this is a bullish cycle. Here we have 1, 2, 3, 4, and then a fifth wave might cap off the current rally. So right now there's a lot of indecision at the 0.92 area. I would wait for a more decisive move by the market to decide whether, now looking at the daily, to decide whether there's a breakout or if the market wants to continue consolidating for a little longer. Looking at 4 hour time frame, that continuation of consolidation would be confirmed if the market is able to break below our 0.90, 60, 90s, 50 area, as well as this rising trend line, and that would also be coincident with breaking our here the 200 moving average. Your stochastic also should come down to the oversold area before you decide the market is continuing in consolidation. So these are some of the signals that you want to look for in the Aussie dollar in the coming sessions. So this is the near-term outlook towards here, 61.8%, and then you want to monitor that level to see if the market will decline for more consolidation or rally for more testing of our resistance area. Here's the pound yen pair in the 4 hour time frame. We mentioned in the previous post that there was a bearish divergence, and the market is apparently having a bearish attempt after that completion of this retracement pattern at the 61.8% area. So this apparent near-term bearish action is just that, in the near term, until it could break this rising trend line. If it does break this rising trend line and offers a pullback as a confirmation, you may want to consider the outlook, the bearish outlook, with a swing projection. Here we see, let's look at the daily, the swing projection. You see here with the swing from 143 to 133, and then now retracement, another swing projection would bring us towards the 128.50, 129 area. Okay. Looking at the, well, actually, let's looking at the weekly. We see that's the 78.6% area. Well, we saw that in the daily as well. But main thing right now is to look at the 4 hour time frame to see if the market can break below this rising trend line. On the other hand, if the market does stay above and breaks above 139.50 and even 140 area, then we may have to consider the bullish outlook towards this previous this higher resistance level here around 146 and 147. You see, as I zoom out, this is the previous, let's get rid of this Fibonacci for now. This is the previous bottom here, and it acted as a support here again. So right now, if the market continues to break, we might be testing this as resistance at the 146.50, 147 level. But right now, in the near term, the anticipation should be bearish, and we should be monitoring price action as it approaches this rising trend line. And that's all for today. Visit fxtimes.com for more fundamental and technical updates, as well as educational live events. Once again, I'm Fan Yang, your technical analyst here at FX Times, wishing you good trading.